you're watching this wondering, should I buy now or wait? I'm going to give you a framework that has nothing to do with timing the market perfectly, because the people who wait for the perfect market usually end up missing the opportunity. I'm Varsha and I sell real estate in Guelph and the Greater Toronto Area, the GTA, and I'm going to share with you how to know if now is the right time for you to invest in real estate in this market. We're talking your time, not the market's time. So here's what I see all the time. Buyers who are ready financially, emotionally, yet they're sitting on the sidelines waiting for rates to drop some more, prices to crash, the perfect deal to appear, and some magical signal that says now is the perfect moment. And meanwhile, they're staying in cramped quarters or continuing to rent. Their family has outgrown their living situation, their space, and their commute is killing them. And they're watching those same homes that they've been tracking for the last 4 months sell, all while they continue to wait. So let me be clear, I'm here to help you make the right decision for you, according to your time, based on your situation, not headlines, and definitely not your uncle's opinion, which is stuck back in 2021. Let's just forget what the market's doing for a second. And if you have these 3 signs, waiting no longer makes sense for you. 1, your needs in life are clear. You're not buying because you should or because everyone else is. You're buying because your family is growing and you need more space. Your commute is truly unsustainable. If you're renting, you're kind of tired of your landlord's rules or all of the potential rent increases as well. You maybe want your kids in a specific school zone, and you might even be relocating for work or perhaps even returning back to in-person work. Now, I would be remiss if I didn't have a little nod towards my investors, but if you're an investor and the rental math finally makes sense for you, you might be ready. Now remember, if your why is strong and specific, that matters more than market timing. Side note, I had a client 2 years ago relocating to Guelph from Mississauga for a new job here in Guelph. You know, we started chatting a couple of years ago and she was pretty comfortable waiting. People around her told her Guelph's gonna crash. The Guelph's market is going to crash. And meanwhile, she was spending $2,400 a month in rent, burning into that down payment that she had. And her kid was in a school zone that she really wasn't comfortable with anymore. So finally, through the process, through some coaching, through some guiding, we were able to align on that monthly math and what her down payment needed to be and the area in which she could purchase, and she finally moved in September. And yeah, her monthly payments have probably gone up about 4% instead of buying in March and she purchased in September. But the stability that she got, you can't really put a number on that. The stability that she's giving her children and the peace of mind, and hello, the lack of a commute. She went from 90 minutes, like I'm talking traffic of commuting, to 12 minutes. Regret listening to others in my life instead of myself. Her words, not mine. Okay, signal number 2 that this might be your right time. You can comfortably afford the monthly payment. Notice I said comfortably and not technically qualify. Just because a bank will lend you $800,000 does not mean you should borrow $800,000. Look, here's the reality. We've all heard the advice from long ago where your housing costs really should only encompass 35% of your monthly income. But in 2026, that's almost impossible for people here in Southern Ontario. The reality is that a lot of homeowners are 40, 50, almost 60% of their monthly income goes towards housing. So instead of worrying about the percentage, I'd say focus on this. Can you afford comfortably? Can you handle that monthly payment and still have room to breathe? If the furnace breaks, if the rate goes up, if you have a slower income month, does that wreck you or can you absorb it? If it wrecks you, you're not ready. If you can absorb it, you're likely good to go. So run the numbers, and a note for investors, run the rental income against your carrying costs. If you're counting on 100% occupancy year round, like with 0 vacancy, and that's because you need to break even there, I hate to break it to you, you're too tight. I mean, for example, here in Guelph, especially with student rentals, you need to buffer for summer vacancies and turnover costs. Signal number 3 that this might be your time to buy real estate. You're buying for 5+ years minimum. Real estate is not a short-term play. If you're buying because you think you'll flip it in 2 years and you're not sure where you'll be 3 years from then, just hold off. If you're planning to stay 5 years, 10 years, then these short-term market swings don't really matter. Over the 5-10 year period, we've seen that Guelph and the Greater Toronto Area real estate market have historically been stable and appreciate. We have a university here which draws employment. We have the university. There's the quality of life factor. There's the GTA proximity and many other services that make Guelph quite desirable. And for investors, Guelph generally sees good demand in the rental market, and we have a variety of rentals here, whether it's legal basements, whether it's student duplexes, student housing complexes, whether it's triplex, multiplex. We have a wide assortment here, but you need to be able to hold on to that housing, to that investment long term, and ride out any of those vacancies. And of course, factor in your maintenance costs. So if you have all three signals, a clear life need, comfortable affordability, and a long-term time plan, waiting is just delaying your life. Okay, let's talk about what the market is actually doing, because if you know how to use it, you'll be able to spot the opportunity too. In my last video, I broke down the December data. Prices are down approximately 6 to 9% year over year. The inventory's up and sales are down because buyers are being cautious. This really is a confidence play here. And what does this mean for you? You have more choice, which means you can take your time to compare, to really do your due diligence, investigate an area, a community, a school zone. You can just slow down and consider, what do you actually think? And that's valuable. You have negotiation room. You can protect yourself. In my last video, I mentioned that there were homes sitting for 60, 70, 90 days. Those are opportunities if you're a patient and informed buyer. Last month saw 71 expired listings here in the city of Guelph. Sellers are open to price adjustments. Buyers, this puts you in a much better position because you're not buying in a frenzy and you can make informed decisions. Okay, for investors, this is actually ideal. You can negotiate on price, ask for rent rolls if it's currently tenanted, ask to see the frequency of rent, do proper inspections, and find properties that are already set up legally and registered with the city. You can really take your time and you're not competing with other home buyers who are really making emotional decisions when it comes to the price that they're offering on a property. So here's the actual framework. How do you actually make this decision? Answer these 3 questions. Do I have a clear life need? Can I comfortably afford the payment? Am I staying 5+ years? If yes to all 3, congratulations, you're ready. Okay, next, it's very important that you define your non-negotiables. We go through this often, actually. I'm always saying, what's on your deal breaker list? Knowing that sometimes we also need to be flexible. So some examples for non-negotiables that clients generally bring up are school zones, the right school district, of course, commute, proximity to their work or transit, base requirement, layout, the neighborhood vibe, the community, the walkability. Okay, side note for investors, rental demand, legal rental status, and proximity to transit or other amenities are important for you. And finally, run the numbers. We all love a little financial math, don't we? What is your maximum comfortable monthly payment? What does that translate to in purchase price at current rates? And what does the market have in that range in your targeted neighborhood? If the numbers work and the inventory exists, you're a buyer. Congratulations. Not sure if you realized it. Okay, so let's just get one thing clear. I know I mentioned that you should have your non-negotiables and deal breaker list, and while that's great, a lot of the times our buyers end up finding a property that fits at least 70% of that list. Okay, perfection does not exist. The perfect home will exist for you, and even in that home you might have to make some concessions. So stop chasing perfection, stop chasing that perfect time. You are not waiting to buy at the absolute bottom. You're trying to buy a home that works for your life at a price that you can afford in a market that gives you options. If you have that, you're ready to go. And right now in Guelph and the GTA, you've got options. And if you're still not sure and you want to run that monthly math, or you want to talk about your situation specifically, I've got 3 calls available for this month. The link is in the comment below. Just honest conversation for your situation. Okay, I'm curious. Are you buying? Are you selling? Are you waiting? What are you doing to inch a little bit closer to your real estate goals? Okay, talk to you soon. Don't forget to subscribe, and I'll see you on the next one.